Welcome to the Corporate Treasury 101 podcast. I'm Hussam.
And I'm Guillaume. In this podcast, we are going through the fundamental concepts of corporate treasury, which I learned from my experience working at a Big Four consulting company.
And he'll explain it in a way that someone like me who knows nothing about the topic can understand.
We hope you enjoy the episode.
Going back a little bit again to the technicalities of those cash flows.
Yes.
How exactly do you track those again?
Yes.
So we talked about positioning and how we track positioning. How do you track your cash flow and your forecasting of that?
Hussam, I really like the mindsets. Again, let's get into the technicalities. We have tackled the why, the what, how it affects the boardroom, the cash flow forecasting. Let's tackle the how. So it's actually quite similar to cash positioning. It's just a little bit more advanced. Again, it highly depends on the maturity of your treasury department, right? You will anyway receive the information somehow, and you can point it out manually in Excel. And actually, there is a lot of modeling courses on YouTube explaining you how to develop a proper cash flow forecasting model in Excel, because that's something companies do, but indeed, as of a certain size, critical size, companies tend to do this in a more automated way. So the more automated and integrated, the more accurate, obviously, which is what you want to aim for when it comes to cash flow forecasting, because you want to be as precise as possible, as we just explained. So you want to regroup all the information we just talked about, your operational expenses or incomes, your non-operational transactions, and your financing cash flows. You want to regroup them and have the information of all of them in a centralized tool. So you will typically get the AP and AR, the account payable and account receivables, from the ERP, typically, because that's where the accounting is done. So this is where the information is regrouped already. So you want to make a link between the ERP and the system in which you are doing your cash flow forecasting. We are just going to come to this in a moment. You also want to have the payroll information, for instance. This you can typically ask to your HR department or to the third-party provider that's managed the payroll. You can also get information from the payment hub. The payment hub, we mentioned it earlier. This is typically where your company will be connected to the banks. So this is where you will collect the bank statements and then you aggregate them in your finance tool. And for the financing cash flows, well, you typically ask your finance department or you link yourself to these financing departments for the financing entries. All this, you will technically do it in your TMS, your treasury management system, because this is where you regroup most of the operational, non-operational, and financing flows. If you're really next level, some companies do it in a specialized tool. So they link this specialized tool to the TMS, and one tool will be dedicated to cash flow forecasting, depending on how important it is strategically for the company.
Okay, so this treasury management system, the TMS,
yes,
is really the critical part in all of this, and maybe even
very
further
much.
than that.
Very
I'm
much.
sure we'll talk about TMSs in the future.
We will certainly do.
Very good. Thank you very much, Guillaume.
Thank you, Sam.
See you next time.
With great pleasure.